Wednesday, July 5th, 2017, Maneco 64, home of alternative economics and contrarian views. So I'd like to do an update on precious metals. I know a lot of you must be thinking what's going on. We had a big move down on Monday, July 3rd. Gold dropped from like 1240 to 1220. Silver dropped back down to $16. This morning, July 5th, we're a little higher. Gold is at 1225. The high's been 1229. Silver has been able to hold above 16. It's right now $16.12. So yeah, I made a video very recently, probably a day before, I think on Saturday, about, you know, the next leg up in precious metals and gold being one for the ages. Does this move on Monday change my mind? No, not at all. But first of all, I like to talk about the relationship between the Japanese yen, the dollar, and gold or precious metals. And I think that's really important because despite the fact that the dollar index has been going down, the Japanese yen has kept the dollar from going even further down and has kept gold in check as well. And I say that because the gold price and the price of the dollar in yen, they have been inversely related. And by that I mean every time the dollar goes up against the yen, gold doesn't do very well, and vice versa. Every time the dollar goes down against the yen, gold does well in terms of dollars. So we have to go back to like 2011 for this, because you can see here by this chart that the dollar dropped to a low of around 75 yen. And that's pretty much around the time that gold topped at above 1900. And then the dollar bottomed there. We had the start of Abenomics, which is the throwing of the kitchen sink by the Japanese government, the Bank of Japan, you know, at trying to devalue their currency and get their economy going again. They did that by cutting rates to zero, printing loads of money, buying stock market ETFs, the Bank of Japan. So you can see there, since the end of 2011, beginning of 2012, and then up until basically middle of 2015, the dollar rallied from 75 to like 125 against the yen. So a big move up. And that was the time when gold dropped from 1900 to 1045. You can see there, end of 2015, when gold got down to 1045. The dollar had just rallied from below 120 to above 120 against the yen. But ever since then, the dollar has gone down. You know, we've gone from above 120 to you know, to around 100 last year. In the middle of last year, you see the dollar broke below 100 against the yen. That was when gold hit 1375. It was July 4th, I think, last year. And silver went up above 21. And then in November last year, the dollar started rallying again against the yen. That's when gold dropped to, I think it was 11. I'm not sure. Let's have a look at the chart here. Yeah, that was when gold dropped to around 1125. And since then, though, you can see the dollar has dropped back and gold has gone back above 1200. You see the lows there in the dollar this year against the yen. They correspond exactly to the top in gold at 1295, once in mid-April and once in the beginning of June. So now I'm going to have a look at some more short-term charts. start with the yen. So you can see here that on Monday, the dollar rallied quite strongly against the yen from below 112.50, and we went up, I think almost up to 114. I'll tell you right now where we are. Dollar yen is 113.44. So the dollar now strengthening a bit against the yen. That's why gold has come off from 12.29. But as you can see, the trend though since the end of last year has been down. But right now, the dollar is on a leg up against the yen, and that's why gold is having trouble. And now let's have a look at the dollar index. You see the trend in the dollar index is definitely lower. It's more accentuated than the trend down in the dollar versus the yen. I still think we're going to, short term, we're going to go to that 94 level. You can see that the dollar kind of was oversold in the last week, and you know, we rallied on Monday, and I think though it's going to turn back around and go back down. And I also think that the yen will, you know, the dollar against the yen is going to turn back down. Now I'm going to bring a chart of a gold just to look at it here. As you can see, it seems to have held because earlier this year we traded down to that 12.20 area, and this is pretty much where we've held now. Will it hold? We'll have to see, but I think people need to keep an eye on the Japanese yen and see how the dollar does against the yen. If the dollar rallies against the yen, that will be bad for the gold price. It will be negative for the gold price in dollars. If the yen rallies, which means that dollar yen price getting lower. It's a bit confusing, but that's the dollar going down, that's the yen rallying. So we need to see dollar yen drop back down, you know, from around 113 where we're now back towards 110, and then 109 will be the key supports for the year so far. That's what we need to see. Dollar index as well looks pretty weak right now. This is, I think, just a little counter trend rally that we're seeing. So impossible to tell exactly when things are gonna turn around definitively, but I think this is just a small correction. We need to keep an eye on the dollar yen. That's really important because the gold price seems to be pegged to that currency pair right now. So what else has been happening? Well, there's a lot of you know, geopolitical events going on. North Korea as well. I guess you had that ICBM launch by North Korea. Apparently it was successful and it can reach Alaska. I guess that's the other part of the equation that keeps the yen weak. Don't forget, Japan is right across, you know, this, you know, the sea there is right across, very close to the Korean Peninsula. And it's one of the reasons, I guess, the Americans have stayed militarily in Japan, is to keep the peace over there. And so if things are kicking off in the Korean Peninsula, that's bad for the yen. So, and good for the dollar against the yen. Yeah, that's all I wanted to talk about today. Just an update on the precious metals. Frustrating, yeah, but I think longer term, nothing has changed. People need to be their own central bankers, stack silver, gold if possible, cryptocurrencies as well, more like speculative in my opinion. Track record isn't that long. I was watching an interesting video. I think it's Silver Shield. I'll put the link above in the eye for you. And talking about how, you know, back in the 1760s, how the colonies were able to flourish because they were issuing their own debt-free money. And then, you know, the British stopped that, and that's why you had the U.S. Revolution. And, you know, And now, you know, we've got all this debt in the US and all over the world. So it looks like the bankers are still in charge. What's gonna end that? Will that end? I don't know. But hopefully more and more people will wake up to, you know, this scheme of, you know, indebting people in order to let them have money. It doesn't make sense. Money is supposed to be something that frees you up, makes exchange, you know, easier in direct exchange. It's not something that's supposed to enslave people. So if you enjoyed this video, please give me a thumbs up, share it far and wide, subscribe to my channel, watch me on steemit.com as well, and follow me there. It's steemit.com. I'll talk to you later. Bye.